Let's be honest, everyone talks about gold. It's on every financial news channel and every headline. Gold, gold, gold. But while the whole world is looking one way, an incredible all-out push for artificial intelligence dominance is creating a secret, explosive demand for another metal entirely. This isn't just another investment tip. This is about how the global AI race is quietly setting the stage for silver to make an unprecedented move. We've all been taught that silver is just gold's less exciting little brother. For years, that might have been true. But a fundamental shift is happening right now, just beneath the surface, driven by a technology the world can't live without. The markets are still treating silver based on its past, but its future is being rewritten inside the world's most advanced data centers. Here are the 5 reasons why silver is set to massively outperform gold in 2026. The first reason is the most important, and it's the one almost nobody is talking about yet. The demand from AI isn't just another line item on a balance sheet. It's a new voracious appetite for physical silver. Here's why. AI isn't just code. It's a physical reality running on immense, power-hungry hardware. A single hyperscale AI data center can burn through as much electricity as a small city. To manage that power and the intense heat it generates, you need materials with unparalleled conductivity. You need silver. Because of its unmatched electrical and thermal properties, silver is a critical ingredient in the high-performance components that make AI possible. It's in the specialized solders, the connectors, and the thermal pastes that keep these billion-dollar servers from melting down. For years, the amount of silver in a regular server was tiny, but modern AI servers are completely different beasts. They are dense supercomputers, and that engineering requires more silver to handle the extreme power and heat. This demand is non-negotiable and largely insensitive to price. Tech giants racing to build AI infrastructure will pay what it takes to secure their supply chains. Now, here's where it gets interesting. Broader industrial demand for silver is expected to dip slightly in 2026, mainly because the solar industry is finding clever ways to use less silver. This has made some analysts bearish, but they are missing the forest for the trees. The AI sector represents a powerful new driver that is creating a structural shift in where silver is being used. So while one industry is thrifting, the most important technological revolution of our time is developing a permanent and ferocious appetite for the metal. The second reason silver is poised for a major move is that this new wave of AI demand is crashing directly into a market that is already stretched to its breaking point. For the 6th consecutive year, the silver market is projected to be in a physical deficit. This means that for 6 years running, the world has consumed more silver than it has mined and recycled. The shortfall for 2026 alone is forecast to be a noteworthy 67 million ounces. The cumulative deficits over the last 5 years have already drained hundreds of millions of ounces from inventories. Now, you might think that with higher prices, miners will just dig up more silver, but it's not that simple. Most silver isn't mined on its own. It's a byproduct of mining for other metals like copper, lead, and zinc. This means its supply is inelastic. It can't ramp up quickly just because silver prices are high. While mine production is expected to rise by a mere 1% in 2026, it's nowhere near enough to close the gap. The market is already running tight, relying on dwindling above-ground stockpiles. Now, add the new, relentless demand from the AI industry on top of this already strained supply. It's a recipe for a major price correction. The third reason ties this all together with geopolitics. This isn't just about supply and demand, it's about a technological Cold War, and China is playing to win. Beijing has made AI dominance a national security imperative, aiming to lead the world in AI by 2030. This has triggered a monumental build-out of domestic data centers and semiconductor plants. And what is one physical commodity they absolutely need to make this happen? Silver. China understands that the country that controls the physical inputs for AI may control the future. A key part of their strategy is to compensate for weaker chips by scaling horizontally, building more and more infrastructure, which in turn consumes more and more silver. This has turned the AI build-out into a strategic competition for physical resources. As China's AI infrastructure grows exponentially, their need to secure the entire supply chain will become paramount. They're not just building data centers, they are building a technological fortress. The bricks for that fortress are made with silver. This strategic need creates another layer of demand that the market has not yet priced in. The fourth reason is one of the most reliable historical indicators in the precious metal space, the gold to silver ratio. Think of this ratio as a giant rubber band. It measures how many ounces of silver it takes to buy 1 ounce of gold. The modern average has often hovered in the 55 to 1 range. In recent years, that rubber band has been stretched to historical extremes, at times surpassing 90 or even 100 to 1. This meant silver was incredibly undervalued relative to gold. As of early 2026, that ratio has started to compress, even dipping below 50 for the first time since 2012, signaling that silver has begun its catch-up rally. But history shows this could be just the beginning. Let's do some simple speculative math. This isn't a price forecast, but it illustrates the potential. If gold were to reach the $5,000 mark that some major banks are projecting, a return to a ratio of 55 would imply a silver price over $90 per ounce. The rubber band has been stretched for years. Now, with the powerful new force of AI industrial demand acting as the catalyst, it's starting to snap back. If you're starting to see the hidden forces at play in the silver market and getting value from this breakdown, do me a favor and hit that subscribe button. This channel is all about uncovering the trends that the mainstream media misses. Don't miss what's next. The final piece of the puzzle is you. It's the investor. The secret of silver's AI-driven demand is getting out, and as it does, it's triggering the fifth and final driver, an investor awakening. For years, the story was that silver's industrial use was a drag, making it less of a safe haven than gold. But that story is flipping completely. Investors are beginning to realize that silver's dual nature, as both a monetary metal and an indispensable industrial commodity, is its greatest strength in the modern world. We are already seeing the first signs of this shift. Physical investment demand for silver is forecast to surge by 20% in 2026 to a 3-year high. Why? Because smart money is front-running the inevitable. They see the structural deficits. They see the unstoppable demand from AI. They understand that when